Hello, hello. Thank you so much for joining. We are getting started. Help you guys with issues with your business, specifically today with payment processing. So we'll have an expert on a call today with us who's specializing in payment processing for the businesses. If you guys are using Stripe, you ever had issues with Stripe or any other processors, he will show you how you can diversify your structure. Also for people that are located overseas, if you want to lower your fees, just create more diversified infrastructure for the payments, because at the end of the day, like in e-commerce, that's where the buck stops, right? Like if you are not getting the money, if you're not getting cash flow, if your money is locked in, it will be very, very hard for you to scale. And today we'll be fixing that for you. We have an expert. I have also my partner Mark here, big guy, probably have seen him on the ads and in the community as well. Marcus, thank you so much for joining me.
Yeah, of course. How is it going?
Good, my man. How are you?
Doing great, man. Doing great. Of
You had your workout already?
course, man.
Mark is so religious about his workouts. It's like there's specific time, he's just out. No matter what happens, he's very diligent, very disciplined, and a big inspiration for me as well. So yeah, we're waiting for our expert in payment processing to join us. His name is Michael. And then, by the way, like who's joining us in Dubai? We will have our lead mastermind in Dubai. If you guys are visiting Affiliate World Conference in Dubai, like end of February, so February 28th to 2nd of March, we'll have our event in Dubai, like 200 e-commerce entrepreneurs joining, exchanging insights, exchanging value, exchanging, what's working right now. 7, 8, 9-figure e-commerce entrepreneurs all coming together. Payment processing is one of those things that we'll be covering, and also many, many other things. So if you are looking to join us, just ping me in the community. We'll drop the link here as well on the chat. With that being said, Michael is here.
Alex, can you guys hear me?
Yeah. We cannot see you though.
All good. Give me just a minute here. Just got in the office.
Hey.
You guys see me now?
Yeah.
So I know we were kind of just briefly chatting in the background, but you guys were looking at just the payment setup in terms of like whether you're doing orchestration or if you're looking at like a tier one provider. I think it was just kind of like an overall view of like really kind of what's a good setup for brands that are over like what, $1 million plus per month, or what's kind of the threshold that you guys are like looking at right now?
Yeah, I think would be great to. First, like if you can share more kind of your background. I mean, you've done some amazing things, and then I would love to talk about just like best practices, the main issues that you see people are facing. When using Stripe, when using Shopify payments, PayPal, like all of those things that pretty much prevent entrepreneurs from scaling. Like in e-commerce, I mean, obviously you have the marketing side, product side. Have to choose the right products. You have to do good marketing. But then at the end of the day, like if you have cash flow issues, if you have holds, if you have reserves, if you have your merchant account shut down, pretty much, I mean, nothing else matters. So it's one of those very, very important elements. And just wanted to share with people the best practices when it comes to that, so they can set up their business in the right way and prevent those things from happening.
That makes sense. Yeah, I'll just give a background on myself. I know, Alex, we've been working together for, going on about 2 years now, but worked with a lot of students in your academy. But my background, I actually started at Wells Fargo Bank. So I've always been in banking and then cut my teeth in the payment space in about 2009. So it's funny because when I got into payments at Wells Fargo, Stripe was like a 10-person company at the time. So they were like the darling of fintech and had the easy pricing. They were scaling. And then now they're this massive organization. But I worked for a couple different startups. One was in Europe for transforming global payments, and I worked for a popular processor for a lot of the scaling brands, which is Reach. So I was the VP of sales over there for quite some time, and then moved to really a consultant role. So now I just advise international online sellers on overall payments risk strategy. We're hooked into about 25 different providers. So the problem that I see is a lot of these providers say that they're great. They're saying, hey, we can do this. We're the best thing since sliced bread. But if you really get under the hood, you find that their support's weak. It's lacking. The authorization rates are dismal. Fees are egregious. They have these funding holds that happen. So we really delineate down from the best processors from really the worst. We're not really associated with those ones, but we'll give priority onboarding. And we also help with getting funds that are stuck out of the likes of Stripe, Shopify, PayPal, really anybody. So that's been a lot of clients, obviously students that you've helped scale. They've had these massive holds, and we're able to kind of get the liquidity back to them where they can kind of level set, get the foundation of the operation built, and then scale to really just new heights, right? Our goal is to get them really just fixed and then just get to the level that they really want to get to, which is, in most cases, 1 million plus or more. So I think just kind of taking a step back and just educating like the audience, there has been massive fundamental changes in just the payment processing industry in general. Specifically, like a really kind of focus point and highlight, particularly on drop shipping. There's just a lot of bad drop shippers out there, unfortunately. Not saying that this group is any way associated with it. It's just there's a lot of just fraud happening in the marketplace in general. And I just got off a call with, heads of Visa, and again, there's different kind of mandates in different regions with Europe, UK, US is starting to step up on just kind of what they're doing. But just to kind of set the table, there's like a massive de-risking of really almost every provider out there. They're really looking at everything from like a fine-tooth comb in terms of like there's just this business fundamentals, and that really kind of correlates to like, what's the product, who's the manufacturer, is there a valid supplier agreement contract in place? Everything is just heightened up, like even in just the last like 60 to 90 days. And that's really globally, even in Hong Kong, we're seeing it really everywhere. So that's where you're seeing massive restrictions on the likes of, let's say, Stripe or Shopify payments and PayPal, kind of like the three horsemen there with what they've been doing. They're just not as flexible as they used to be. So I don't know if you want me to kind of touch on, Alex, maybe kind of going into each region and certain providers or things to look out for. I can kind of comb through really just the requirements for each provider now, and certain things that I see a lot of businesses that are missing elements, like on a KYC or KYB process, that may be helpful, and then maybe providers in each region that we're looking to route customers to. Would that be helpful?
Yeah. Let's roll. Yep.
Cool. So yeah, I think one of the main things that we see is issues, and again, you have to keep in mind like what worked in the past doesn't work today. So I see a lot of like super successful guys, million plus brands that, they opened an account with Stripe 5 years ago, and it was like a shell entity or just paper entity really in the US, right? And it's still working, right? It could still work today. But the big change on Stripe is that Wells Fargo was the sponsor bank on the back end. They really let Stripe have a lot of flexibility on their underwriting, but Wells Fargo left that bank sponsorship. So that happened last year. So now there's new banks in the back that are really making these requirements more rigorous for Stripe, right? So now they're auditing some of these things. So I think, where I see a lot of struggles and just understanding is what worked yesterday doesn't like work today in a lot of cases. So what worked a few years ago doesn't work in today's environment. So you have to be super buttoned up. And so from like an onboarding process, you want to have like your KYC, which is all your personal identifiers. And most of the guys that I work with, obviously they're students in your academy, they're non-US residents selling to the US, or they're trying to sell into other markets. So you just want to make sure you have valid government issued ID. In the US, you want to have an ITIN, which is like a 12, 14-week wait now. It's just there's a massive backlog, and you need to have like an office. You can't really use a registered agent address anymore. It's associated to thousands and thousands of businesses. So having a physical desk, and it could just be like a WeWork. You don't need to have this massive office building. It just could be like a WeWork where it's a shared desk that complies with the scheme rules to a Visa and MasterCard. So that will allow you to get stable processing. And I think the key word is stable. If you're using a registered agent address, it could work, right? But you always want to err on the side of caution, is that if they flag it and something happens, then it's like you're going to get shut down. So it's like just pay the $300 a month or whatever to just have that desk, right? And you could do month to month. It's very simple to do, and I help guys do that all the time. So getting the foundational elements of your entity set up is super, super critical. I've seen guys, multi-million-dollar guys, shut down with like Mercury because they didn't have an office address. It's like just little things that cause these massive issues and holds. So again, it depends. So I think what you also have to look at, and this is a whole nother topic, is your product, right? So especially in the US right now, there's this creator economy, which is kind of bundling into the drop shipping with like high pressure upsells. there's a lot of dictation on how your account is being scrutinized based on what's called your MCC or merchant category code or vertical. If you're in like medical, or if you're promising things like, hey, I got this cream, it's going to fix my face and make me look like, Tyra Banks or something. I don't know, but like anything that's like gimmicky or like guaranteeing things, like that's an automatic flag, right? So you got to be careful in how you position things. So that could lead to a shutdown. And I think I mentioned the KYC, KYB stuff. If you're missing something on that side, that can flag a shutdown. So medical, if you have doctors on there, high pressure upsells, subscriptions that are like bullshit subscriptions, and I'm like, you get a membership to get a 5% discount or something. Like it's nothing really, but you're paying $50 to get that. Right. So you just got to be very careful with how you're doing that. And then on subscriptions, like the way that you're opting in, like you can't just opt your customers in and have like the most profitable upsells bundled at checkout. Like it's got to be something where the customer selects it and you can rank it, and like there's strategies around this. So the answer is it depends. There's so much stuff that's been changing and in flight that it's hard just to say this is the silver bullet solve to your problem. So it's always, I always recommend a call, and I can kind of go through it, and within typically 10 minutes of a conversation, I'll be able to say, okay, these are your problems and this is what we need to do. I've been struggling with payment providers for a very long time, registered a company in Delaware, waiting for my EIN, bank account in Mercury, that's the trick. So, okay. So you're opening a US entity and then you're going to sell to the Middle East. That's going to flag big time. Anytime you're in like a market like that, like and you're selling cross border from the US, so it looks like you're a non-US citizen in the US with an entity in the US, and then you're selling cross border. That's not a good mix. You want to keep your ratios, basically. This is a whole nother thing. You want to keep your ratios of your domestic sales wherever your entity is located. You want to keep that ratio mix about 80-20. So 80% domestic, 20% out. Yeah, whenever you go higher on the international side, the scrutiny levels get higher because that's where most online fraud happens. That's where there's more risk exposure for the processors. So you got to be very delicate with that mix. Now, it's hard if you're testing stuff, right? Because you're kind of going everywhere and you're seeing what sticks, but you got to have a pretty good fluid like go to market strategy. Like kind of throwing it up against the wall and seeing if it sticks is like not the best thing. You should have like the top 5, or you're kind of niching down into certain geographies, and you can like convey that to the processor, like communicate like, hey, I'm going to be running campaigns in these markets, and then that way the processor like knows why their sales coming in these areas, right? So like if you're just kind of spraying it against the wall, like, and there's like all these countries, that's another reason for shutdown, right? And most of the time, go ahead. Sorry.
If I can add to that. So, for example, for Omar specifically, right? So he asked this question: what are the options like from what you know, like in those particular like countries? If you wanted to sell like Saudi Arabia, Emirates, Qatar, Kuwait, like where would you establish your company? Where would you get the payment processors from to lower the risk of those flags potentially happening?
That's tough because a lot of processors, like they don't have like acquiring license there, and like you can either use Stripe or Shopify payments. If you're gonna do that, and not to say this isn't supported, you have to go super slow. Like you can't just throttle it like you would in like a market like the US or Europe. Like you have to go super slow, and you really want to put together like a very specific go-to-market plan in that area and submit it into Shopify payments if you're using them. So you want to have like, why are you selling here? Basically, is like the question, right? Hey, I'm selling to this market. I'm targeting, it could be a product specific to that market, right? Like I've worked with people in India, Bangladesh, all over the world. And there's certain products that resonate better there. So as long as the business model makes sense, they can look at it and okay, this aligns, and we're okay with this risk, and we'll keep this account open.
Cool. Amar, let me know if that answers your question, please. Yeah, if you can answer the one from Bazit.
Yeah, that's fine. I deal with merchants without a social security number all the time, non-US residents. You can have an ITIN. best practices for payment processing. And this is mainly for the US, guys. So there are like five main kind of players that everybody kind of knows in the US. Like you have Maverick, you have Goat, you have Lucra, Gitrix, Seamless Checks. Those are kind of like the five main ones, right?
And,
So
and just to add on that, Mike, if I can add, like, so I mean, I think it was you who referred us to checkout.com,
hmm,
and working with them has been phenomenal. They're like the approval rates, we're getting like approval rates higher than Stripe in many cases. We are getting like 92, 94% like approval rates on transactions, which is great. I mean, no holds, no reserves, like, I mean, no pain in the ass. Like specifically like, for checkout.com, I don't know their requirements. Is it only for US residents? You need to have like social security number, like, for example, how aggressive they are, because as a provider, they have been phenomenal to us.
yeah, it's different per region. They're a global provider, and then again, we kind of stitch in with like we have a connection with Airwallex, Payoneer, Adyen, so we kind of will model it based on the profile. We'll kind of put you with the best one. But yeah, checkout's good. So like it kind of like snowballs off my what I was talking about with the other providers. You have these like high risk providers. So they have these like sub-regional banks behind the back end that are supporting or sponsoring them, right? The only issue with them is the authorization rates, like you mentioned, right? So you're going to be like 70% with those guys because they have a lot of high risk businesses using them, a lot of online brands. Like a checkout, like there's a lot of scrutiny to get through checkout. I know we worked together on that one. They ask you for bank statements, they ask you for processing, and there's more rigor. But that rigor means that they're vetting those clients out and like they're putting through good businesses with good traffic from their website, right? So you're going to get really good, like optimal approval rates there. So there is a little bit of gating in terms of that. But like, again, we can kind of help assist. But that's the difference between like, I call it like a tier one provider. So Adyen, Checkout, Airwallex is kind of there, but they're kind of slowing down a little bit. Nuvei, PaySafe, those are kind of tier one. And then you have like the high risk providers. They'll get you approved, but you're going to lose like, I mean, it's 15% conversions. And you got to think of it as you're marketing, you're getting them all the way to the checkout page. And for them to click checkout or pay, and then it declines, like that customer's pissed and you're probably never going to get them back. You can retarget them over and over again, but like you did all the hard work and they just can't make a payment. So like to me, that's like the kiss of death. You got to find a provider that like optimizes authorization rates over just fees. I'd rather pay authorization rates than lose the customer in checkout.
Got it. But I don't know if we answered his question completely. He asked also like most merchant processors require at least one local director that's US resident.
Right. Sometimes it depends. There's some out there that will allow you to get through without that requirement, but you're going to lose your authorization rates, or you can do a merchant of record provider, right? So that's kind of like Reach, like I work there, and you get local acquiring without having an entity there. But there's been massive changes on their risk tolerance too, and this is merchant of record in general. You have to have an entity for greater than 2 years, and you have to have, the entity could be, just the entity, right? And then you have to have at least 6 months of processing. So they want to see stability there. So there's been some change. So that's another way around these kind of entity rules and requirements.
Mm-hmm. Yeah, okay. Omar, can you clarify that? Like, so for Omar's situation specifically, like, would he have to register company in UAE, or if he has like US entity, US processing, can he still sell in Gulf countries with that? Like, is that eventually going to get him shut down?
I mean, I think the question would be, do you actually have plans to sell into the US? I think if you're opening a US entity, then selling outside of the US, like absolutely not. I'd recommend to either set up like you can do a UK entity or wherever he's located. Hong Kong, you can do that. Like Hong Kong's very flexible. Like you can just set up in Hong Kong and sell out of Hong Kong like 100%. US is way more restrictive with that.
What are the approval rates usually with Hong Kong? like in your experience?
It's like 70, it's kind of the same, 70%, somewhere around there. And your fees are just high, but it's like 8%, 9%. But it's better than being shut down, I guess, is the flip side.
Uh-huh, got it. Wow. Yeah, this is so fascinating. I mean, that's like literally one of the reasons I moved to United States. One of the main reasons, probably the main reason I moved to United States because I lived in Europe and like had all of these issues with payment processing. There was no even like Stripe, like we had to like travel overseas like to register the company. And then we moved to United States. Like now there's like so many different options here for merchant processing. So life-changing for business. So how is like, let's say Stripe in US or Shopify payments in US versus Shopify payments or Stripe in UK? Are they kind of like less strict in UK versus US? What's usually how they treat merchants?
Yeah, Europe and UK, because they just have the PSD 2 and 3 directives. So they're like, it's more of just like there's just a lot more regulatory red tape in those regions. So what I've been seeing in those regions is if you're kind of like you can start with like the two Stripe and Shopify payments, but you have like Molly and we mentioned checkout a couple different times and Adyen and stuff like that. There's very, very minimal like amount of processors that take these like kind of startup drop shipping businesses. You gotta have good fundamentals. I think that's the key is that you're gonna have to really, everything's got to be super clean on the website. You got to have like a good business plan. There's just way more red tape in those regions, way more, and there's more restrictions. US Shopify payments is a lot more reliable, in my opinion. Not as much red tape. It's just simpler to use. Just overregulated in Europe and UK, in my opinion, right now. It's crazy.
Mhm. Gotcha. So yeah, another question from Bazit. Is Hong Kong Shopify payments? That's what you said. You said it's like 70s, right? In terms of the approval rates?
Well, yeah, it depends where you're selling. Like domestic approval rate. So, like if I'm a US business selling to a US consumer, like your approval rate should be like 90% plus, right? You're going to have declines. Like people aren't going to have money on their credit card or they overdrafted their bank account or it's just blatant fraud. Like I stole someone's card and I'm trying to use their card and to their bank. So you're always going to lose like 8%, right? So if you're over 90, that's great. So domestic payments, you should always be at that. Now, Hong Kong is different because no one really sells in Hong Kong. They kind of use Hong Kong to sell outside. So it's kind of like it's like apples and oranges to a degree. So yeah, your US Shopify payments will perform better for US transactions for sure.
Mm-hmm. Got it. And do you help entrepreneurs to set up these kind of like infrastructures?
Mm-hmm. Yep. Yeah. So there's a lot of we work with two different international tax guys. I kind of advise on it. Again, I'm not a CPA, and I can give recommendations and stuff, but sometimes it's like untangling Christmas lights because a lot of the guys that not in your class, but just they scale fast. They have an entity here, they got an entity over here, and it's like, what's the point of this one? They cut the cost. We can use a merchant of record over here. You don't need to have that entity. It's going to implicate you tax wise. It's like I can kind of work with them on that stuff. So you just got to make sense. So like these tier one providers, like they're digging in big time, right? So I'm kind of like I work with them, and I'm like a gate. Like it goes through me first. I'll get it clean, and then move that packet so you just get approved super easily. And they're just asking questions about everything now, even clean files. It's like I had one yesterday. It was like, what is the purpose of this question? I don't understand. So underwriters, we sit in a cubicle all day.
Mhm. Gotcha. Answer that one for the best alternative to Stripe. Like, would that depend on specific like person scenario, like where they're based, kind of like which nationality they have, whether they're based in US or not in US, and would that be kind of like dependent on a particular scenario?
Yeah, 100%. I always ask like my main questions that I ask, where are you based? What regions are you selling to? What product are you selling? and what are your scaling projections, right? From there, then I'd be able to prescribe it a little bit. And then how long have they been open? Because a lot of times, like the merchant of record provider, like it's like a cheat code in a way, because you can get local acquiring. It's like you're using their entity, but you're getting like great approval rates. You're getting the local payment method. So, we kind of we bordered a lot there, kind of when we first started working together, because you get PayPal too, which is great. But it just depends, right? There's kind of this like dissecting period where I need to understand a little bit more, and then we prescribe to the right provider.
Gotcha. And also, I mean, one of the things, I mean, you helped us with, I mean, when we used Stripe and we had these like holds and reserves on Stripe, you helped us to basically talk with them and like get that hold removed, or yeah, I think we removed it. And
Yeah.
then, so is that something that you're also offering to people, right? Like helping them with, if someone has like $100,000 like locked in on Stripe or PayPal or like rolling reserves, like what are the conditions for those? Like who you can help, who you cannot help, and if you can describe that.
Yeah, that's been like our more popular program. So yeah, we basically will put together, it's like a 2 week sprint. So once a customer signs like a proposal with us, and we're basically, think of us as like almost like your payments manager or payments team. We have ex PayPal like compliance officers that are on our team, kind of working on de-risking the business. So we'll like go through the full website, audit it, clean it up, make sure everything is like customer centric and like bank policy specific. And then we'll build like a business case to show, hey, based on what we see and how we see it, this is what we believe the reserve should be, or you should release X amount of funds, and then we'll fight over like a 90-day period to get the funds out. So yeah, that's been a lot of clients who work with on that. And I think the beauty of it is we kind of it's like a coaching program, and it's like a hybrid coaching program plus get the money out, plus we can get them set up with a payment processor. So like I'm giving all the insights, and then they have this like 25-page document of like, man, I kind of know what to do now moving forward. So like, they keep in comms with us afterwards, and like they're good to scale and go after that.
Yeah, and this is something that I've noticed, like all of the big players, they really have the payment infrastructure dialed in. I mean, one of the lessons I think for everyone is, let's say if you're using Stripe, like maybe people here that are on this call, like using Stripe, maybe they have like no reserves, no holds, no problems whatsoever, but they have low dispute rates and stuff like that. I think that is the moment where like usually when people are using Stripe, yeah, everything's going well, like no holds, no reserves. You never know like when this can happen, like out of nowhere, like something can trigger, or on a particular month, you have higher dispute ratio. Like for example, you might have like a massive like Q4, a lot of sales, maybe have like gift related products. Then Q1, you're getting all of the refunds, all of the disputes, all the like customers, maybe packages were not delivered on time, customers are upset and stuff like that. You might have higher dispute ratio. So I think one of the things for people is if you want to apply for new payment processors and just have that diversified like infrastructure, it's best to apply when you have those metrics like really, really like on a good level, right? When you have low dispute ratio, good payment processing. So if you can elaborate on that, please.
Yeah, this is something that Stripe, you just got to proceed with caution. Like I've seen a $10 million a month business using Stripe and shut down. I mean, it could do immense damage to your business, right? And I have like really good friends at Stripe, and like they don't even know how some of the decisions are made. And like we're talking like great friends where I see them and like we're having beers and doing dinners together. Like they don't even know the answer. So like what I would recommend is that you want to kind of have like this 3-layer approach. Like so, if you're using Shopify, have Stripe or Shopify payments there, right? But you want to have a tier one provider. Right? If you're doing 500 grand a month, a tier one provider is again a Checkout, PaySafe, Nuvei, somebody that is doing the underwriting up front, but they're like a lot of scrutiny on the underwriting process, and they're linked to like they're global, right? And then you have like 2 high risk processors underneath Stripe and Shopify payments. That's how I would roll. You want to have your tier one Stripe and Shopify, and then 2 high risk providers as like backups if something were to happen. That's at $1 million plus, probably what I. That way you've got safety nets kind of all over the place, and you're not really scrambling if something were to happen. Because you lose a day or two in sales, that's like tons of cash, right?
So. Yeah. Awesome. Yeah, we have a question here, how to connect with you if someone has holds or closure of accounts. I mean, I'll just tag you here in the community and I'll tag you in here. So yeah, you can reach out to Michael directly and you guys can talk. Okay, so what are the minimum like volume levels? I mean, most people like in our community here, they're doing like at least, you know, $100,000 a month. That's the requirement, like literally to join the community. Like, is that enough processing volume to apply for some of these like new kind of merchant accounts and payment processors?
Yeah. Yeah. Usually, I mean, again, you kind of have to like think of it as like going slow to go fast, right? It's like you don't want to just pop it off real quick. And I know that's kind of the strategy, and that's where things start to kind of have problems a little bit. What processors want to see is you can handle the scale, right? Where they get nervous is, you know, you're a one person with a VA and then you scale to 200 grand from like 20 grand, right? And then that's where the customer service comes in, the refunds, you know, customers have questions or shipping delays. Like it's easy to lose control. It's hard. It's very hard to deal with. So just scale it like in a way that's manageable, right? And if the customer or if the processor sees good fundamentals, they're willing to take in a 50 to $100,000 business and get it to 200 grand. Like they're fine with that. So yeah, I mean, I think there's communication. Like anybody can get in. You just, you know, the 50 to 100 grand spot, like just show that you're managing it, and you should be all over your chargebacks. You know, have chargeback alerts. You should run a clean operation, because if you can't do it at that, you're not going to do it at 250. So that's kind of what they're looking at. So they just want to see a couple months, usually 90 days of processing.
Man, it's so hard. You know, we have ambitious entrepreneurs here. You know, when they see something's working, they just like want.
I know, I know, I know. It's I've been having like a lot of, you know, I call it the come to Jesus talk with someone. Like you just gotta kind of go slow here to scale it. And again, I know we all want to push, and don't get me wrong, I'm the same way. It's just hard to convince a processor to take it in when if you have massive problems after that.
And then for let's say entrepreneurs that want to sell, let's say someone has, you know, someone wants to like US company. Okay, yeah, it makes sense. So if someone like sells products successfully, let's say in US markets, right? Has the Stripe there, and then wants to sell in, I don't know, UK, for instance, right? Or, you know, let's say Europe. So they would have to get like separate like entities in each one of those countries. Like what's usually the setup looks like for someone who sells, I don't know, in like 10 countries around the world, or everything just goes through the same. And obviously with Germany, you have Klarna, you have, you know, kind of like local processors that people mostly using. So what's typically the setup for international sellers that are selling, let's say, in like 10 countries around the world?
Yeah, it depends on the mix, right? I think in certain parts of the world, like if you're a US based company and like that's the lion's share of your revenue, and you're kind of going into a market like, let's say, Germany, for example, like Klarna is not that, I shouldn't say it's not that popular in the US. Like it's not like a need to have in the US. Like you can have like Afterpay or PayPal or ShopPay and you'd be fine. Depends on your average order value too. But if you go into Germany without Klarna, like you're dead. Like you're not going to survive, because that's the biggest payment method, or PayPal. So yeah, I mean, it's kind of an involved discussion, right? Like I work with, you know, some very large publicly traded companies before, and like every market is very unique. So you need to really understand like what's the most desired payment method in that market, right? Because like Ideal in the Netherlands or Bank Contact in Belgium, like it's not in the US, right? So there's education there, and it's like, well, in order to access that, you either got to work through a provider that has those preloaded, or you have to have an entity to go direct, or you can use a merchant of record. It's kind of three different things. So then it's like, okay, then we'll run through the costs and say, okay, this is the cost to do the entity, and this is what the tax implications are. Or you can do a merchant of record, and you're going to pay more in fees, but it's easier to get there, and you're testing, right? So there's a lot of like art to that. There's a lot of questions you'll want to kind of pull out, or I'll pull out from like entrepreneurs that are looking at testing these markets, and you got to kind of dissect to see if it makes sense. Can you survive just offering credit cards through your US processor, and just PayPal, right? And so that's where I would really kind of dissect and really, it might be a mix. You might be able to use your US processor for, let's say, Canada sales, and then you might want to use a merchant of record.
Can you elaborate what merchant of record is?
Yeah. So a merchant of record, so if your business is a merchant of record, right? So you are the entity operating in whatever area of the world that you're in, and you're processing payments through that entity. A merchant of record is basically, think of it as they are the merchant acting on your behalf, and they're actually they're a reseller in a way. So they're basically acting as the entity, and wherever you're selling to, and you're contracting with them to process the payments. So if you go to like the checkout of any merchant of record provider, whether it's Paddle, FastSpring, Reach, to checkout, on the terms and conditions, it'll say like Reach or to checkout or whoever it may be. And on the receipt, it'll show like to ch your business name. So technically, they're the one that actually is the entity that is making this transaction, and they have the entity in this area. So Uber is a merchant of record. Amazon is a merchant of record. Like when you buy on Amazon, it shows Amazon. It doesn't usually say the provider. So merchant of records are really everywhere. It's just part of, you see it every day, don't really recognize it. But there's payment processing specific providers, like again, Paddle and FastSpring, all these guys that will they'll do the taxes on your behalf and payments, and you get that local acquiring, local payment methods.
So they're taking, I mean, in a way, they're taking risks as well, right? Let's say you're processing through them, and then I don't know, you're not shipping your products or something, like, so they're taking, or not shipping products on time. So they're taking a risk like on your behalf as well. So they're like, the vetting process must be like very substantial, right?
100%. Yes. So the merchant of record inherits all of the risk. So if there's a lawsuit or anything, that's why there's a lot of scrutiny with them, because they're on the line, they're on the hook, essentially. Then it just goes downstream, right? And as a merchant of record, you have to comply with certain Visa and MasterCard rules. You have to comply certain tax regulations and reporting. You are the merchant essentially operating in that area, and you're just processing payments for these sub merchants.
What are the fees usually like with merchants of record?
It's like in the middle, right? So like if you have like direct processing in the US, like your rates are, let's say it's 3% with Stripe, right? And then let's say if you had an entity there, so I'll start that way. So if you had an entity in the US, like you get 3% with Stripe. But if you're processing from Europe and selling into the US, they have a markup of 1.5%, and then the currency conversion of like 1%. So you're paying like 5.5%, right? So you have US entity would be 3%, selling cross-border would be 5.5%. So a merchant of record's kind of in the middle. So they're like at 4%. So you're saving like 1.5%. But if you're doing a ton of volume, that's a lot of money, right? So
got it. But at the same time, you're simplifying the setup, right? Like you don't have to register entities, kind of like submit all the documents. You'll have to submit documents to them, but you won't have to kind of like create the whole kind of entity from scratch.
Exactly. Yeah.
And let's say for a company that sells in the like United States, and wants to get like a Klarna account, or Ideal, for instance, like can you still leverage the statements, like the processing in the US to get those accounts, or they don't pay attention to those kind of things?
No, they look at that. So yeah, that's something when you go to Klarna Direct, they'll ask, just for some of the business fundamentals. You can work with a provider that kind of has that preloaded too. Like AirWallex has, that preloaded, and you can have Klarna, directly within the US as part of the payments package too. So yeah, they look at it. They want to make sure that you're operating a good business.
Cool. Awesome. Yeah, I think no more questions. If you guys have specific questions for Michael for your specific situation, tag him in the community, just hit him up on WhatsApp. And when it comes to diversifying your payment structures, also, holds reserves, anything to improve your business, like from that financial standpoint. Michael is your guy. And yeah, man, I mean, that was very insightful. Like even for me, I've been doing e-commerce for a long time, but these are some great insights. I think it was very, very helpful. Thank you so much for joining us. And yeah, for everyone, if you guys want to join us in Dubai, we'll have conversations like this, payment processing, we'll have, other topics when it comes to scaling your business, like marketing, sales, operations, team building, like everything to help you guys take your business to the next level. Yeah, so there's all the details we shared on the chat when it comes to our event, and would love to see you guys in person. Michael, thank you so much for joining us today.
Absolutely, man. It's a pleasure. Thank you.
Yeah, thank you so much. And this is the first call of its kind that we did. So yeah, guys, please post like any feedback, or any other topics you want to cover on the next calls. So we plan those out. We invite experts, people that are specializing in different fields. You can try it and go and figure it out yourself, or you can just learn from experts who've been doing this for dozens of years. And that's usually the best shortcut to get anything in life. So yeah, appreciate you guys joining. Michael, thank you so much for joining us. Marcus, thank you so much, my man, for joining us today as well. And yeah, you guys have a beautiful rest of your days and kill out. Let's make 2025 great.
Thank you. Have a good one.
Thank you, guys.